Today, everyone is talking about NVIDIA and AMD, but the AI boom has a quiet power player that almost no one's paying attention to: Marvell Technology. It doesn't just make flashy GPUs or AI chips that you see in headlines. Without it, none of those systems actually work. If NVIDIA and AMD are the brains of the AI revolution, Marvell is the nervous system, connecting every part of the data center so information can flow fast. And the stock, it's been volatile, down over 20% year to date, but up double digits in the last 12 months. And the question is this a buy the dip opportunity hiding in plain sight or a trap masked by hype? Marvell is doubling down on AI data centers, tightening its focus and partnering with giants like Microsoft and NVIDIA, while also buying back billions of its stock. So in this video, I'm going to break down what Marvell actually does, why it's often misunderstood, and whether the stock's worth watching right now. My name is Rick Orford. I'm not a financial advisor, and that's a good thing. I don't do hype. I break down the numbers so retail investors can make smarter, more informed decisions with their money. With all that out of the way, let's get into it. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/ricko to get your 10 stock picks right now. Marvell Technology is a semiconductor company that designs and develops high-performance chips and other related products for AI data centers, cloud computing enterprises, and more. It operates through 5 segments: data centers for AI accelerators and cloud products, enterprise networking for Ethernet switches and edge computing, carrier infrastructure for 5G wireless connectivity, and automotive and industrial and consumer products. Now, I know that when it comes to AI semiconductors, you're probably more familiar with the NVIDIAs and AMDs. But Marvell, they're not like them. Some of their products include wireless and networking processors, Ethernet transceivers, Ethernet switches, and storage and memory accelerators, as well as hardware security processors. Bottom line, Marvell doesn't power the AI models directly. They're building the systems that move the data between the chips fast. Marvell is the kind of glue that connects the processors from NVIDIA and AMD together so everything communicates faster. And that's the hidden magic. It's not always the biggest names that enables the biggest shift. And this, I think, is why some investors are sleeping on Marvell and similar companies. They may not be as big as NVIDIA, but their roles are essential in the AI and cloud ecosystems. So the question is, how do the numbers actually stack up? Well, Marvell went public in 2000, right near the end of the dot-com bubble. It debuted at $15 a share. Last time I talked about Marvell, it was trading around $83. Now it's sitting at $86. Its 60-month beta is 1.94, meaning it's about twice as volatile as the overall market over the last 5 years. If we zoom out, the stock's mostly a sea of green, except for this year's performance. It's up 19% in the past 52-week, but down 22% year to date. So the stock's been on a bit of a roller coaster, but a disciplined one. The kind of stock that tests conviction before it rewards investors. So what are the factors that could drive Marvell's stock growth moving forward? Well, it's the catalysts, and this is something that comes up a lot in my Discord channel. Data centers are Marvell's big play today, right? They're betting heavily on it. Now, starting in the fourth quarter, Marvell is going to be simplifying its revenue reporting into just 2 categories: data center and communication, and everything else. And that will include networking, carrier infrastructure, consumer products, and of course, automotive. To me, that signals that it's not just an accounting change. They're making AI and data infrastructure their core identity. Marvell is also scaling back its automotive segment. They've sold their automotive Ethernet business, for example, to Infineon, and that displays just how serious they are about doubling down on data centers. Marvell is also targeting the hyperscalers, sovereign data centers, and emerging markets with custom-built silicon and high-speed networking tech for specific workloads. As more countries build their own AI infrastructure, Marvell's adaptability gives it a clear edge. Another thing about Marvell's technology, it's customizable. Unlike those off-the-shelf solutions, Marvell works closely and directly with clients to develop tailor-made silicon for their workloads. And that flexibility means deeper relationships, more recurring revenue, and fewer direct competitors. And I think it's working. Marvell recently expanded its collaboration with Microsoft, for example, to provide hardware security modules for Azure Cloud HSM. It's also working with NVIDIA on the NVLink Fusion platform, which combines Marvell's custom silicon and networking experience with NVIDIA's high bandwidth chip-to-chip interconnect technology. This lets the cloud providers and the hyperscalers use Marvell's auxiliary processing units, or the XPUs, alongside NVIDIA's GPUs for optimized performance. In plain English, NVIDIA handles the compute, and Marvell makes sure the data gets there fast, no matter what. Now, let's circle back to why Marvell's stock has been gaining traction recently. The company recently authorized a brand new $5 billion stock repurchase program and launched a $1 billion accelerated buyback program. This move proves that Marvell, they have a strong balance sheet, they have the consistent revenue streams, they have the leadership that believes in their long-term potential. It also reflects management's confidence in AI infrastructure as a lasting growth story, not just some short-term bubble. That buyback continues Marvell's commitment to return capital to shareholders. And to top it off, Marvell announced a quarterly dividend on September 19th, 6 cents a share. It's small, sure, but it proves to us that for a growth-focused semiconductor, a steady dividend means strength and confidence. So these were the catalysts that can set the stock higher. But it's only one side of the story. There are risks to the business model, and I'm going to cover it in my next video, so don't miss it. All right, so with all that out of the way, is Marvell stock a buy? Well, to answer that, let's see what the analysts say. A consensus among 34 analysts rate Marvell stock a strong buy. This is a sentiment that's been consistent for the last 3 months, averaging 4.49. That's very high. Analysts also have a high target price of $122. That suggests as much as 41% upside in the stock. And it's significant because Marvell's a company that barely anyone talks about. For investors who appreciate Marvell's focused strategy and can handle a little volatility, well, this could be a solid long-term position in the AI infrastructure space. But what about you? Are you buying into what Marvell is doing? Let me know in the comments below. And while you're there, like and subscribe to the channel. It'll help others find this video, it'll help the channel, and you won't miss out on any of my future deep dives. Well, folks, that's it for me today. I wanted to thank you so much for watching, and I'll see you next time.